Hi everyone, Stuart here. I'm back in my normal office today. So welcome to theproptrade.com. It is Tuesday, the 9th of December. Lots and lots of data already dropped today. Um, Lots of chatter. We've had a massive move in the yen, obviously partly driven by the quite large earthquake north east of Japan suffered overnight. But really, it was all to do with comments from the head of the Bank of Japan, Udia, and particularly the Prime Minister, Mr. We've been pressured. We've got JGBs, the Japanese government bonds, at record highs, especially out the long end. And Udia's comments in his speech also talked about having to purchase more. So yen's been hammered quite significantly. Uh, Positive spin from Australia. Unexpected, no change from the RBA. 3.6% it remains down in Australia. So the Aussies benefited from that. The yen's been massively under pressure, and so we've had a massive move on Aussie yen. Just make that. No, is this Aussie? No, it's dollar yen. So dollar yen at 156.50. The Aussie yen. Why has that dropped out? Why has that dropped out? Why has that dropped out? There we are, we're back. Aussie yen, 103.90, 104 in sight, and this is the multi-month highs. If we go up to we got the weekly chart, we can see we were up here back in July 2024, not 2025, so 18 months ago. We were at 18-month highs for Aussie yen, and there's no sign of that breaking that monthly. That's a weekly chart, guys. Look at this, the strength or the weakness, particularly of the Japanese yen, added to. This is all before Takanichi took charge here back in June. And we've just rallied, and big old weakness. Bank of Japan, one of the most able to interfere with the forex market, should we say, and keen to do so. 104, 105 here at the Aussie, as we saw the yen, dollar yen, 156.50. We're looking like we were going to get to 160 earlier. Earlier this year, we were at 160 here back in July, again 18 months ago, but 156 again. Remember, we got this weaker dollar, but not as weak as the yen. So big old rally. Sterling 208, another record high here for sterling. Again, this is the weekly chart for sterling, 208 against the yen. The well known has been the a widowmaker sterling yen, because it moves so much with regard to its pips range. You see there, it's nearly 3 whole basis points on a weekly basis. If we look at see there on the ATR down here, 1.33 on a daily basis. So huge moves for pound yen. So you can get caught the wrong side of that. But if you're a trend follower like I am, you just stay steady. Don't get spooked out. That has been moving higher for us, as long as we can remember. The cross above the 20 was all the way back there on the 10th of November. So it's been bid for a while, and no sign of that cooling. Support now through there at 207 on a daily basis for pound yen. Anyway, back to the data. Let's just come out of that for a minute. Where's my forex metric on there? So plenty of news overnight. You Asian traders had lots of volatility to get your teeth into. What we're waiting for now is the JOLTS report. 2 jobs reports, one from September and one from October. Obviously delayed because of the government shutdown. What hasn't been delayed all through the government shutdown has been the ADP, the private payrolls data. This week it's coming. Again, it's a little bit delayed because it's Tuesday, not Wednesday, ahead of non-farm payroll. It should have been last week, but anyway, it has been sort of backed up. But it's coming positively, 4,500 negative. Last week it was 13,000. If we just look at so again, it's that mixed data we talked about last week. We had a big negative ADP last week, and the big surprise reduction in new unemployment claims, 191,000 last week as well. So there's this dichotomy, definite sort of signs of the weakening of the US jobs market. But as we saw, the consumer remains resilient, and the economy is remaining relatively resilient. There's been no huge impact from the tariff announcements. Is that still to come? Many are saying, well, surely it would have been here by now. It would have been in some of the hard data. It's a fair argument. Jobs certainly weakened. See what obviously gets said tomorrow. Lots of chatter about more than a 25 basis point. Hassett this morning has been reported saying, there's room for more than 25 basis point cut tomorrow. Obviously, Stephen Myron, the other government man on the Fed now, is probably arguing for that. And we'll see what the dissent is like on the other side of the market. Those that don't want to think the market is doing enough to smooth things out. We don't need to cut rates again in the US. Obviously, massive pressure from the politicians in charge, from Trump down through his Treasury Secretary, through his Business Secretary. So lots of pressure on political pressure on the Fed and Jay Powell in particular to do something about that. Haven't resisted that. They've resisted that yet so far. So we'll see how that pans out tomorrow. But that's tomorrow night. As far as today's concerned, as I say, a positive reading. First time in 3 weeks. So you see these negative readings. Sorry, 3 months. 3 weeks. What am I talking about? It's normally monthly, but because of the shutdown, they've revised it. So negative for 3 weeks. We've turned positive this week, which is positive. It's lifted the dollar a wee bit. It's lifted stock markets this morning. Cash market is only just opened up. Rishad, we're not doing. I don't know. We're doing giveaway today, are we? Nobody's told me about giveaways. There will be, Rishad. Don't worry. New version of the PropTrade.com. We are definitely up to giving giveaways into the end of the year, and certainly this kick off 2026. So keep posted, my friend. Any particular asset you're interested in trading, let me know, and we'll have a look at it on the charts. I say we're here for the news at the moment, so I'm just a quick review of the news, and then we'll see where we are. I'm back trading again. Got some skin in the game, so we'll go through that in a little while as well. But thank you for being here, Rishad. ADP finally come in positive. I'm trying to show you the. Is that going to give me a? No, it's not. I was going to get a little chart, but it's not anyway. ADP better than expected. All right, it's gone back to the last month. What's it gone to today? Forward to let's come back to today. There we are. So there we go. Big news. So far today, lots and lots of movement, politically driven move in the yen. We'll have a look at the yen in a minute. So we're waiting for the jobs openings. 4 minutes to the data dropping 7.23 million for September, and the October number 7.1 million. So again, signs of a easing in the in the jobs market, but if we just click on the chart there, you can see it's been cooling quite significantly for a while. Okay, so let's just leave that for now. Get our chart back. Where's my trade locker? There we are. So Aussie, I say the yen very, very much in play today. Dollar yen at 156.50 is being tested again. So there's the daily time frame and the hourly time frame. We just look at. The other major mover today has been the Australian dollar. We saw against the yen there, but the Aussie 66.46 with that confirmation of the rate staying at 3.6%. Aussie moved lower and then spiked higher, and we're back to where we were earlier this morning on all the data coming out of Australia. So 66.50 is a clear resistance area. That's just above here. You can see that we got into that ahead of the news yesterday. We continued to rally yesterday, down into close, profit taking on this big old rally we've had, and there we are. We're sort of consolidating at highs here. You can see on the hourly chart, but we remain bid. So hourly chart still above the few hours here under the 20-hour moving average, but we're still above it. If we got the 4-hour, we sort of blip into the 20 period moving average. But there we go. Little retrace here from yesterday's attempt at and this morning's attempt at 66.50. We've had and we've been back there again. So 1, 2, 3, 4, 5, 6, 7 hours here, banging into 66.50. We don't want to go higher, so we could turn down from here, or eventually that level will break to the upside. If we look to the left, you can see we are at relatively strong, very, very strong levels for Aussie against the dollar. So 66.50, big old resistance area, and we're yet to break it yesterday or this morning. So, but don't try and short this too early. If we look at our, this is our trending strategy. Remember, across the moving averages, the 21, the 9, and the 5 EMAs, simple moving averages moving higher. If we look at our VWAP strategy, which I think I've fixed. I think it was working earlier. There we are. Slipped down under the volume, but volume is still holding up. So again, you see that 66.50 area, big resistance, but still above the hourly or VWAP, and so we are positive. If we look at the mean reverting strategy, our Bollinger Band and stochastic strategy on the same movement, the trend has outweighed the reversion. So we see a stop here. We had that's that move down yesterday. There's the big move this morning to the upside. Looked like we were going to move down. It's drifted into, I suppose that has actually technically worked. We breached the outside of the Bollinger Band there. They crossed, their first cross was a weak one here, there, and then, but if you'd had your stop at the Bollinger Band, you would have been stopped down that spike up there. But it has eventually got to target one before going up. So you can see the bias in it for the trend is still to the upside. So you did well to hang on to that. See the big volume spike here as the US market is open as well. Stock market's opened here at 2 o'clock. Oh, sorry, let me get my. Can't see the actual asset there, can you? So hopefully you can see the asset. So that's the Aussie dollar, very much in play across the board today. So let's just look at some of the other assets before the data. Actually, the data has just dropped now. Let's have a look how that's come. I've lost my calendar. Let's have a look how that's coming. It's just coming across the terminals. Yeah, asset this morning with it. And I think it was at CNBC talking about wanting more than this 25 basis point cut. So the JOLTS numbers just crossing the terminals. And we have, what's that coming in at? It's software steps. I want that down there now. There we are. JOLTS has come across. So the October numbers coming at 767, which is really interesting. That's coming better than expected. The September data hasn't actually dropped yet. September 30 is coming at 723 as well. No, it hasn't. Let's have a look at the graph. So that graph we were looking at before has moved lower again. So we are. So it's better than expected. So 766 for the September data. So September's coming in at 766. October's coming in at 767. My only thing there is that they're really quite close. So 723 was the previous reading in back in August. So job openings are coming better than expected and significantly better than expected for the October reading, which is really quite powerful. We were 766. We were expecting 7.14 million, and it's coming at 7.67 million. So if we just look at how the Aussie or the dollars reacted, let's just go back to the main. Look at the dollar crosses. We look at the euro, 16.25, so it's coming off a bit. There, the dollar's certainly picked up on. Just put on the 5-minute chart. See how it's reacted to the 3 o'clock date. There we are. That's coming much better than expected. Let me just reiterate that. So, JOLTS openings. Remember, these are openings. It measures churn, people swapping from job to job, and actual postings. The businesses can't find people. 7.66 million job openings in September, and the October number 7.67 million, both much better than expected. That will have lifted the dollar a bit, and it would have hit the stock markets that have opened positively. We'll come to the stock markets in a minute. So 116.25 here for the euro dollar on that news. Yen will have come off. I've gone in the opposite direction. So 56.65 now. 156.65. Not helping the yen, lifting the dollar. Aussie will have come off a wee bit. There we are. Aussie's back from that test of the 66.50 area. We're at 66.43 now, and sterling back to the big fat round number 133 from a high earlier this morning at 133.50. So 55 pips to the downside so far today from the top for sterling, which is a quite interesting move there. We had some strong UK data this morning. So dollar picked up on the JOLTS number in particular, and the ADP was also positive as well. Remember, came in at 4.8 million. So positive data for the US market. I would guess the US administration will be out there touting, banging on the drum for a bigger than 25 basis points cut tomorrow. We remain around 89% as of yesterday. Last time I looked, as far as the CME was concerned, for the rate cut tomorrow. Let's have a quick check of it now. See if it's probably hasn't updated. 1 day and 3 hours to go, it says here. So let's have a quick look. This free tool is available to everybody. Remember, www.cmegroup.com. Markets, interest rates, Fed Watch tool is what you want to look for. It's a key. Lots of people look at it. 89.2%. So it was 88, I think, or 87 something yesterday when I last looked. It was nearly 88. So 80. So that's ticked up since 86.2 yesterday. So it gradually declined yesterday into 86.2 and 80. But again, it's given, isn't it? And let's see what that has, if that's actually made a change to the January reading as well. January's right. So this is towards the end of December, the January announcement, right at the end of January, and then there isn't one in February. You can see here it's not until March. And by the 28th of January, we'll certainly know who the next Fed chair is going to be. We'll probably know in the first week of January, knowing the way Trump likes to manage the news. So 60. So it's still a little chance of a change. Less than 70% chance of 66.6. Some say the sign of the devil. Chance of no change in January, but that's still looking like that. But still a 25% of another 25 basis point cut in January. Certainly that data is looking pretty hefty. So it'll be interesting to see now how those dissenters that's expected to say we don't need to cut now at this meeting, if they get voice, and how much people like Stephen Myron have got to say. Remember, there's 12 of them on the Fed, 9 voters, 9 voting members, and obviously Jay Powell with any potential casting vote, but that hasn't been the case for a while. But again, also dissent hasn't really been, or much dissent hasn't really been an issue with the. I'll just take the volume off that actually. With the Fed, there we are. So big move for the dollar here. So sterling, 132.92, having broken that key 133. Euro presumably also continuing to decline. Indeed, it is 116.18. Next stop. Actually, I don't know. I'm saying next stop. So, I didn't look at it, did I, on an hourly basis? But that's a bigger. Oh, there we are. So we're testing these. So, yeah, dollar bid on that. Better than expected ADP number, and better than expected the 2 JOLTS readings. So it's a significant tick for The administration. Let's look elsewhere. Let's look at the indices because we are now open for business. We have been for about 30 minutes. The cash markets, as I see at the moment, we're up. They spiked. They haven't actually seen that data. 66.85 on the S&P 500, up 9 points from yesterday's close. So just have a quick run through these. So the Nasdaq here on the hourly basis. Interesting. Not particularly moving on that data. It's another 5 minutes. Not Bias to the upside. So the open was 230 here. So we moved lower. Pre-market, now we've opened strongly and we're sort of holding it at the moment. Yeah, so we're up again. It's really, really waiting for tomorrow night and the indication of where the Fed are going and Jay Powell's press conference in particular. The, the degree of hawkish talk, the degree of dovish hawkishness in the expectations, how many dissenters we're going to get, what these dot plots are looking like. Are we looking at 2, 3, 4 cuts in 2026? Obviously, the colour of that will be very much dependent on if Hassett gets that role or another big dub gets that role. But certainly, we've got much more compliant and dovish Fed as we go into 2026. So Nasdaq 25,500, 295,595 at the moment. Sorry, that's DAX. S&P 6851. This derivative market. So I say we're just above where we closed last night. The cash market 6853 as well. So as we expected, a weaker stock market as the dollars ticked up. The Dow 47,800 also down in the last 5 minutes or so. There's a nice little cross there. Outside of the Bollinger Band, outside of the Bollinger Band, outside of the Bollinger Band, across there. So that would have been short. We were on short there at 47.87. Stop loss above. So that hit stuff, but that's a nice short opportunity on this crossing strategy there. You can see that. So the touch the outside of the Bollinger Band. We're still going higher, still going higher. Wait for a cross of the stochastics. Then you can see in the 5 minutes. So there's the actual. So we're still going up. The blue went under during this candle, but we didn't confirm it till that candle. So you'd have been short there, or the system would have, encode this, waits for the candles to close and the cross to be confirmed. It wouldn't have gone short until actual completion of the 15:05 candle there at 47,886. Probably going to be filled at that price, but that's short. It's in the money. Target is the midline of the Bollinger Band, 47,777 at the moment. Or trading it manually, and then stop loss would be here, top of the market, turn of where the Bollinger Band is initially. Nice move down in that first 5 minutes, so we pulled our stop loss down now following that first candle, and wait and see. As with all trading, patience is everything, my friends. Anybody else with any comments or anything they want to add? Let me have a look. No, Rishabh is comment this morning. Interesting. I've got change the background from earlier. The camera is just go. Should check that before I came out, shouldn't I? Didn't see my shoes, my books in the back. So yeah, move. Speaking of for the dollar, so let's have a look. Gold, 4,194, so under the key 4,200. Interestingly, it was a big old hold. Hourly chart for gold today. We've been up and down, so we actually started quite positive in the European session. We got back to 4,200. Doesn't want to move over 4,200 today, does it? We are down today, so the stronger dollar impacting gold prices are quite volatile in the last that 9 o'clock and that 3 o'clock candle there, also 2 o'clock candle for gold. So yeah, choppy, really trending, but that might be more of Oh, this is the interesting one, isn't it? So, yeah, moving. It's difficult to call. That's so we moved lower, lower, lower here. So Asian session or beginning of the European session, the 6 o'clock candle took 4,170. We then rallied in European and London Open to 4,200, but we and 212. We gave that back. The candle in the hourly candle didn't want to close above 4,200 significantly. It was $4 to the good to the upside, but and then sideways. So again, nothing to get too excited about on the gold chart there for me in the hourly time frame. Um, so let's just take a step back. The daily is doing what? We are still consolidating at highs, basically. So remember, as we said at the end of the week, this is 4,000. We've been 9 weeks, to our 10th week now above 4,000. So we may be running out of steam. You know, this high at 4,400 um, at the end of October, or 4,350, 4,000 shy, wasn't it? Is it running out of steam? Too early to call that. Is the dollar coming back? Too early to call that as well. Stock market's topped out. Too early to call that. But that would be the momentum. That would be the logical connection. Certainly the bond yields have come back. We've come back to 4% on the 10-year. It's tomorrow's pivotal. What's really said, what the plots say, and how the market interprets that. So. Uh, um, you know, keep your powder dry. I would call because look at the reduced volatility. People are taking some time off ahead of Christmas and all that sort of stuff, and then trade that key after Christmas 2 week markets and the all volume. It can be quite positive. But remember, the last time we were in tariff territory in 2018, we didn't have the Santa rally we normally have, so we could see some significant profit taking on the indexes, or there again, we could just keep it rallying and all tax closes and closing out actually happens into January. So anyway, gold sideways, nothing to get too excited about that. Not a lot of action on the hourly time frame there. That would have gone long there. That's looking to go short. So that, again, on this hourly time frame, there's been a week short completing now, but it used to, on this hourly time, right, you'd have to wait 45 minutes. The 5 minute trader would have gone short there at 15. Target one, push down and move lower, but it's bounced back up, so it's still short there on 5 minute. Gold trading, having been long there. There we are. It was already through first target, but it got to target two, closed that out. So we were long to there. Thank you very much. Now we were short from this point here, 4,199.95. Target's a bit too close, so I'm probably taking some on that first big candle following the data. We've bounced up a bit, but we could still see a move lower if the dollar holds its gains from those two strong pieces of data. And so again, depends what's being said on the markets out on CNBC and Bloomberg and all the rest of it about how that's been taken and any other news that's flying around. That was gold. Bitcoin remains somewhat pressured. 90,000. So the key 92,000 handle from last week hasn't. Let's go up to the start with the daily again. Hasn't been recovered. Looked like we were having a good old rally to that or back through that over the last 3 days, and we got to 92,300. But we're back down at 90,000. I'm saying 90,000, it's hugely significant, isn't it? But 80,850 is that low we put in there at the end of November. And then the big support area is the 75,000 handle. Takes us back to the spring, April, the Liberation Day Nirvana low. He's got his peace award now, hasn't he, from FIFA? What a carry on that was on Friday. 90,000 crypto, so still pressured and sideways there. Daily action pivoting through 90,000. Interestingly, below the key 92,000. That's I find quite significant. So 90,000 now for Bitcoin, still sort of pressured down. A bit of consolidation here, waiting for direction to the upside or the downside. But you can see the horror there. You can see the nice forming on the Bollinger Bands, flattening of the upper and lower. The 20-day moving average, the midline of the Bollinger Band, also flattening out over the last week or so. So, watch that 8,500 low, and the top is sat there at that ninth key, 94,000, the top of the Bollinger Band. So, looking for a break of that before I get more excited about jumping back into Bitcoin. But we've been moving down from the all-time highs, haven't we? This low high we got here at the beginning of October. So we've been low for October, low for November. Have we found the low for the year? Too early to call that yet. So Bitcoin moving lower. Oil, which we dabbled with last week, God knows why, from a trend following point of view. But anyway, we're in the money. I think I can't remember what I wrote now, but I think WTI was a double winner, and then Brent reversed to our entry, and we didn't. We only took half of the Brent gains. But as you can see, it was a very weak entry back there on last Monday, 1st of December. We did rally. We got some of that. We took some off at these round numbers, 64 as it was. Sorry, $60 here on WTI and 64 on Brent. The initial targets were, I think, 50 pips and 40 pips, and then we pulled it up. There's the Brent one. There's our initial target. It was below that. Then we took some off at 60, I think 64. Then we had that big down day yesterday, but we'd already dragged up the the stop loss to entry as we do, and then that closed out. So it was only a half a position winner, and then flat for the second half of that. And now it's gone further weak today, which isn't really a surprise to be honest. And that was Brent under 62.50 and WTI under 58.50. So again, oil market remains somewhat weakened, I would argue, on that movement, despite having got a few pips as we moved up last week. So, guys, any particular assets? We'll actually let me run through my open positions. So Friday night, let's just bring in our Discord group. We had Discord, my friends. Trade chat is where I post what I'm doing, most of what I'm doing, not everything I'm doing. So last week was quite a significant losing week from a point of view because we were exposed to the Nikkei. It wasn't a big percentage loss, but over 500 point loss to start December, which isn't great, but no, it's part and parcel of trading. Losses is part and parcel. Oil business, yeah. So WTI 40 pips and then 60 pips the round number. Brent was 50 pips, and it reversed really. So I didn't actually take anything off at 6 dollars. 64.18.8 for 50 pips for half of the position, and then it reversed down aggressively yesterday. Anyway, last week 501 loss. So that closes out. Friday night we were long CAD yen, short Kiwi CAD, and short. So let's have a look at those before we. And then last night we took some. I didn't actually post it, so I'm not going to say I did it, but I am short the yen, and we added to the Aussie as I posted. I think earlier this morning. There we are. I was long dollar yen last night, and I've added long Swiss yen this morning as well. So I'll update you on those as well. But again, I'm not going to add those numbers because I didn't post it as I did it last night. The long dollar yen, but we're certainly in the money. Nicely on that. Thank you on my trading platform. I've just seen that Trump's got a speech due later on today. That's just popped up now. 11:10 my time. So due to speak about the economy at the Mount Airy Casino Resort in Pennsylvania. Casino Resort. I'll speak about the economy. So as he was leathering on at the World Cup, the hottest economy, and I don't blame. I don't blame him. That data today, I don't know whether that speech was it's become a speech because of the data that's just dropped today, and the fact we've got the Fed tomorrow. But Trump expected to speak at 11 GMT tonight as well. Still some data. Well, no more data, but that's the next big announcement today. But see if the dollar continues to improve. Anyway, what we were talking about? We were just going to have a look at where we are in our open position. So CAD, yen, Kiwi, CAD were the two positions we took from Friday night. So CAD, JPY. This is Friday night's move. So that would have. So here's Friday night. We got in here at 12:43. I think I was filled at. Did I actually share the price? Do that to me. I didn't know. No, all right, okay. It was 29.50. CAD yen was 29.50. We were filled. So 2012, 29.50. So it was a bit earlier than. Oh, we got a better price. 29.50, or around about close, wasn't it? 29.50. So initial target was up here at 12.70. So initial target was 12.79. So that's half of that will be closed. Stop loss will be rammed up to the entry level now, and I'm just going to trail that up all this weakness of the yen. So I've added it. I added last night dollar yen, and we've added Swiss yen today. So that's very much in the money. I think Kiwi CAD was the other way around now. Let's pull that down then so I can bring it up. I can't read it. So that's it's 79 was just close last night. We actually hit target one, and so stop loss is up here now at the entry price. So that's locked in. We got 50 points bagged, and we're just taking that higher. And again, I'll have a look at that tonight. I'll update you all later on. The other one was CAD, Kiwi CAD, obviously ahead of the New Zealand. Sorry, Aussie data, but I think that was New Zealand. And what we were short this one, short Kiwi CAD on Monday. There we are, Friday. Sorry, yeah, that's gone against us. I think it's still open. The stop loss was 80.28. The stop loss is miles away, but that was a big negative day. Yes, I mean, I got in here. Where do we get in? 79.75. So yeah, right at the bottom there. That's gone. So that's 75. That's like 50 against us. Yeah, looking to close that out probably. The initial move didn't happen. And the other interesting one from Friday night was the FTSE. Again, it's out of the money, and we got caught. We lost the Nikkei trade. Anyway, it's interesting. My strategy is trying to trigger these short. Short positions on the stock market. So big move down on Friday under its 20-day moving average. It's added to the partly it's not the only thing, but that was our short. And actually, we were out of the money from quite a bit yesterday. Now we're back in the money today, even though we're up. So initial target on the FTSE was 95.65. All the way down here, 95, 60, 95, 65. I mean, set targets on the indices recently, but it's around about their level, the next key, towards the next key fib level, if we can break this 96, 600. The platform I'm trading, my actual live trading account, end of day, is the feed is a little bit different to trading view and the trade locker platform here, but it's not that different, the numbers I put up. But I sort of correlate them to obviously the feed and prices we're getting here on our trade locker platform. But anyway, that's in the money as well. So FTSE is open and still running short and in the money. The CAD yen has already hit target one and very much in the money, and the Kiwi CAD is out of the money and still open, and I'm probably looking to close that as well. As I say, the other position I took last night, well, I'm not going to it was last night. I'm not going to add it to the account. I'll show you on the there's a points or loser, but was this. We went long here yesterday at 55.94. I think I got filled at on dollar yen last night, and that, again, that's very much in the money. But that's, I say, I'm not going to report that. The one I will report is the one I took earlier during the day today, which was the Swiss yen long. Let's go to the hourly chart. So this is from this morning, and we got in. Got in here actually. It's 12 o'clock. I got in at 193.85. Swiss long Swiss yen. Having saw the move down, and we were filled here on that one. Let me just put that in. So that was my actual entry this morning. So that's going to count for an end of day trade. I've jumped in a bit early, but that's going to be an end of day trade for tonight at 193.86. We were filled. Obviously, it might all come back and bite my bum later on. And the stop loss, I can't remember what the stop loss was. I just remember it being on that 12 o'clock candle. And the stop loss on Swiss. It's interesting. It's disappeared now. Swiss. Looking at the wrong thing here. Oh. I've recorded that the wrong way around, I think. Right, so just a correction. It's dollar. I thought it was yen Swiss. Swiss yen. That one's no. I've definitely taken it, haven't I? Because I put that on screen. Right, there we are. So let me just make sure I'm not trying to pull wool over anybody's eyes. This was from last night. Dollar yen. That was that dollar yen, and then Swiss yen is from 12 o'clock today. There's also a dollar Swiss trade looking to start tonight as well. Anyway, I will have a look at that tonight. But I think we might have recorded that. So Swiss yen. Let me just go back to my trading platform. Swiss yen. Swiss yen. And short. This be 90. Yeah, just under 193, I think. So that's not stop loss. This would be somewhere, I think, 92. Stop loss through. No. Sorry, it's an hourly chart. Let's go to the 4-hourly chart. Sorry about this. Yeah, so it was. Yeah, so that would have been the stop loss zone here. It would have been there. 90. So it was just over 93. So 93.08 is the stop loss. Entry is 193.86. There's a big 80 pip move. I'm looking for 50 pips initially on that. As you can see here in the 4 hour, there's my sort of target zone there, 194.50 zone. So we're long that from earlier today. Swiss yen is long. I'll update you on that later. Okay, there we go. That's Tuesday for you, Rishabh. Thank you very much for your comment. We will be doing something, as I say. Let me just leave you with dollar yen, really, as the dollar continues to move high, 56.60. Now we've had a strong move against the yen across the board. Dollars improved significantly with that data, the ADP data coming in better than expected, the two readings of JOLTS coming in better than expected. Stock markets have reversed. Actually, it's given up some of its gains. Stock markets opened relatively positively, and 6,854, so sort of sideways, really waiting as the Fed start their meeting, their announcements tomorrow. So see you tomorrow night for the Fed announcements, 7 o'clock GMT, 1900 hours. I'll see you then. Take care, stay safe. May the pips be with you as ever. And if you're not with the proptrade.com, come and join us. Version 2, we've got all sorts of different types of accounts now available. We've listened to what you guys are asking, and come and join us. We're as good as the next guys. We are the grown ups in the room. So take care. See you tomorrow, and be good, everyone. All the best. Bye bye.